Okay, we'll go ahead and get started. Good morning, everyone. Welcome to Sidoti's March conference. My name is Daniel Harriman. I'm an analyst here at Sidoti. This morning, please join me in welcoming TRX Gold Corporation. The company trades in the New York Stock Exchange American under TRX, as well as in Toronto under TRX. This morning, we have with us the company's CEO, Stephen Maloney, as well as the company's CFO, Michael Leonard. We're going to give them about 20 minutes today to go through their presentation, after which time I'm going to open it up for Q&A. If you do have any questions at any time during the presentation, I encourage you to write those in the Q&A box, and we will get to as many as we can, time permitting. But again, please join me in welcoming TRX Gold. And with that, Michael, I'll hand it over to you. Thank you so much for being here.
Well, thank you, Daniel, and thank you to the Sidoti conference for hosting us again this year. As mentioned, my name is Michael Leonard. I'm the CFO of TRX Gold Corporation. I've got my colleague Stephen Maloney on the call, our CEO. It's a pleasure joining you here today. I want to thank everybody for being here. We're going to do it a little bit differently here today, where I'll do the bulk of the presentation, and Stephen will chime in accordingly for editorial comments for things I may have missed. But both Stephen and I look forward to telling you a little bit about our business here today and what we do at TRX Gold. I do have to mention that we'll be making forward-looking statements throughout the course of our remarks, so I would ask that you please read the disclaimer and cautionary statements, and the presentation will be posted on our website following today, so you can review it in more detail at that time. So who are we? For those that don't know us or perhaps are new to the story, TRX Gold is a producing gold mining company with an open pit operating gold mine in Tanzania, East Africa, called the Buckreef Gold Project. You can see a snapshot of some of the project highlights on the slide, which we'll get into shortly. But at a high level, what we think makes us unique from other junior gold mining companies are a few things. First, Buckreef has a significant starting gold resource of about 1.6 million ounces of gold in the ground in the measured and indicated categories at about 2.5 grams a ton, which indicates a long life of mine and thus many years of future cash flow. We're currently undertaking exploration drilling to unlock the blue sky potential, with the goal of hopefully adding to that resource base over time and extending the life of mine. And we'll discuss this in a bit more detail shortly, but we see this as a big value lever for the company, as the 16 square kilometer land package that we currently hold is largely undrilled, with only around 130,000 meters in the drill hole database currently. Secondly, Buckreef is a producing gold asset, as I mentioned, and we're still in the relatively early stages of our growth life cycle. That's how we'll characterize it, since we joined as a new management team a few years ago. But we still produced about 20,000 ounces of gold last year. We generated about $60 million in revenue and over $22 million in EBITDA. And we continue to demonstrate leverage to record gold prices that we're seeing of around $5,000 an ounce of gold currently. And we'll talk about this shortly, but we did put our Q1 results out not all that long ago, and did a bit of a Q2 results preview that show us continuing to grow things like revenue, earnings, EBITDA, and cash flow accordingly. So it continues to get better from what we published late last year. Thirdly, we did complete a study that we put into the market last year, a preliminary economic assessment, or a PEA, that we published back in May. That shows an 18-year mine life, average annual production of over 60,000 ounces of gold, and an NPV of over $2.6 billion pre-tax at about $5,000 gold. And we think that indicates a significant valuation gap from where we're currently trading. And in the time that we've been operating, Buckreef has shown itself to be a low-cost, high-margin operation that's enabled us to use organically generated cash flow from production to fund growth in a shareholder-friendly, non-dilutive, and value-accretive way. Illustratively, we've completed 3 expansions in the last 3 years, growing our mill to 2,000 tons a day of throughput currently. We did it on time and on budget, largely using cash flow from operations. In short, it's a self-funding business, which we feel is appealing to prospective shareholders. So in summary, we see Buckreef as a unique asset with significant resource base that we hope to add to over time, with growing production profile that's demonstrated leverage to gold price, and has generated year over year growth in virtually all key financial metrics like revenue, operating cash flow, and EBITDA, and a runway to a much higher valuation as we execute against the PEA. Stephen, anything to add, just as an early introduction for new listeners?
No, and the only thing I would add, Mike, is we've done three mill expansions. The PEA has underlying another mill expansion. That is, as you said, well underway. Equipment will be ordered here shortly for that. Tailings facilities are being designed and starting to be built for that. And so we're pretty confident on that whole process and the timeline of that process as laid out under the PEA. Also, I would add that under the PEA, the mine plan was developed at $1,900 gold, which contemplated 3 years open pit and then around 15 years underground. And an 18-year mine life is a long mine life. So that can be compressed as well, and those numbers can get better if the mill size is larger. And we've indicated that the mill size will be larger than what we had in the study. But as we revise the gold price in our mine plans, expect more gold resources to come into that mine plan over time.
So why TRX Gold? As mentioned, we are a producing asset. We have demonstrated leverage to gold prices with high margin, low risk production, and thus are generating strong cash flow. The reason that's important is that, again, it's our operating philosophy as a management team to use organically generated cash flow to self-fund growth in a shareholder-friendly way. As Stephen mentioned, we do have a scalable growth plan and a pathway to a much larger project, as outlined in the PEA, which contemplates an expansion to 3,000 tons a day of throughput, but as Stephen mentioned, are looking at something much larger, as well as the development of an underground portion of the mine. As mentioned, currently the NPV on that study demonstrates a $2.6 billion valuation at current gold prices, which, as mentioned, we think suggests a valuation gap from where we're currently trading. So really, with a significant starting resource of 1.6 million ounces and the significant blue sky potential with several high-grade targets that we expect to drill this year, we think there's a lot of value to be had here with TRX Gold going forward. Our business plan is a simple one. To reiterate, use cash flow from operations to self-fund growth and create long-term value for shareholders in an accretive manner. We've got a robust gold asset in Tanzania, which we see as a tier one investment jurisdiction, because it's really a place where you can get things done. And we'll touch on that again here shortly. And we've got an asset that's cash flowing and demonstrating leverage to gold. We've also got a study in the market that lays out a roadmap to future growth and significant valuation creation potential as we execute against that plan. We've got a successful track record of execution, having completed 3 expansions in 3 years, both on time and on budget. And we've got a proven management team here that successfully operated and grown this asset while prudently managing capital. So the takeaway here is, as we continue to execute against this PEA and a larger project beyond what was contemplated in the PEA, we see significant opportunity to move up the value curve relative to our peers. In terms of project highlights, you can see the map depicting where we are. We're in a very geologically rich part of Tanzania with a long history of gold mining in the area. We're surrounded by major gold producers like Barrick Gold and AngloGold Ashanti, where some of their flagship mines are producing between 300,000 and 400,000 ounces of gold a year. So again, lots and lots of geologic continuity in the jurisdiction. For example, Barrick's Bulyanhulu is only about 30 kilometers away, as is AngloGold Ashanti's Geita Gold Mine, with Geita being our closest neighboring town. So again, lots of geology and history of mining in the area. I touched on our 1.6 million ounce gold resource in the ground as a start, but it's also worth highlighting it's a deposit that's near surface. So what that means is it's relatively easy to mine with a low strip ratio. It's also very straightforward metallurgy, so it's basically easy to process. It's a crush grind CIL flow sheet. So it's not what we call a science project when it comes to milling. So as a result, easy to mine and easy to process basically translates into a low-cost operation, or in our case, a life of mine average of about $1,000 an ounce cash cost, as outlined in the PEA. So at $5,000 gold, you're looking at $4,000 an ounce of margin. Buckreef is a fully permitted asset. We've got what's called a special mining license, which is unique to Tanzania, but in short, it effectively allows us to grow the asset unencumbered. And finally, in Tanzania, there's lots of established infrastructure already in place with things like paved roads and grid power at site, We've got a secure, consistent, predictable supply chain, particularly with the port of Dar es Salaam being one of the largest shipping ports in Africa. And it's basically a very effective way to procure equipment and supplies. So in summary, we see Tanzania as a very, very good place to develop and grow an operating a mine, and a very good part of the world to do business. As mentioned, we do see Tanzania as what we call a tier one investment jurisdiction to do business, and one of the most investable jurisdictions in Africa, because again, it's a place where you can get things done. The government's basically been shown to be very encouraging and supportive of growth. They do want to see an increase in things like jobs and taxes and royalties, and consequently want Buckreef to be the next significant gold mine in country, and are partnering with us to both permit and grow the asset accordingly. This is obviously different than trying to build and permit and develop an open pit operating mine in this part of the world, for example. But in Tanzania's case, it's a very cost-effective place to operate. There's plenty of skilled labor that we can draw from, and a mature supply chain in country. It's a very, very safe place to operate. Stephen and I like to say we drive ourselves around country with no security detail. So we're very, very comfortable operating in Tanzania. And despite being from Toronto, Canada, we do spend a lot of time at site. And our chief operating officer is currently there and spends about half his time in country. It's politically stable as well under the current governmental regime, compared to what I'll call some of the political unrest that maybe we're seeing in other parts of West Africa. And Tanzania has prioritized foreign direct investment with a focus in the mining sector. And so much so, as a government, they committed to growing mining as a percentage of GDP to about 10%, which they achieved last year. So a key focus on that. There's been lots of M&A in countries. There's a lot of foreign investment coming in. Perseus acquired OreCorp and is developing the Nyanzaga deposit, for example. Lifezone's developing the Kabanga nickel deposit. So lots and lots of growth potential and foreign direct investment to come in country. And I'll say finally, we talked a little bit about the supply chain, but it's very, very reliable. As mentioned, we're connected to the national power grid. We've got paved roads within a few kilometers of site. We've got access to one of the largest ports in Africa, in Dar es Salaam, and a skilled labor force to draw from when staffing up Buckreef. We've got about 1,000 people on site, which are about 99% Tanzanian and local. So in short, Tanzania, in our case, and the way we see it, is a great place to operate, or what we call a tier one investment jurisdiction in our view. The slide summarizes our growth journey over the last 4 years since we were brought in as a new management team and board beginning back in 2021. In 2022, when we joined, we expanded what was a small test plant that we had in place at the time to a 360 ton a day mill. The idea there was to get the operation cash flowing to effectively help fund future growth. In 2023, we used the cash flow to do our second expansion to 1,000 tons a day. Again, it was self-funded using cash flow from operations, which helped grow production and earnings and cash flow and EBITDA. And this past year, we did our third expansion to 2,000 ton a day, generating record revenues and EBITDA and year-over-year growth in effectively all categories. And again, as outlined in our PEA, and Stephen touched on at the outset of the call, we're currently evaluating ways to further expand from here. And the PEA contemplated a move to 3,000 ton a day. In the near term, we're looking at something much larger through the addition of what looks like a larger SAG mill and an eventual move underground. So, in short, lots and lots of fast-paced growth and transformation over the last few years, with plenty more to come. So watch this space.
Yeah, Mike, I'm just going to add to this slide here. If you go back there a second. So we did release what our Q2 production numbers were, and that's year to date is Q1. So the production numbers are double what the Q1 year to date fiscal 2026 numbers are. I think in Q2 we did around 7,200 ounces of gold, roughly, and the processing would be commensurated with that as well. What we're seeing is a better head grade as we execute the mine plan, and Mike will get into this in a second. But certainly the numbers are looking more robust than what we have on these slides.
Yeah, good point. Thanks, Stephen. This slide here is really meant to summarize, when we first joined, we did an initial capital raise back in 2021, and the idea there was to recapitalize the balance sheet. The approach that we've taken to growing the asset over the last few years is to be prudent capital managers first, and again, use cash flow from operations to grow the business. And what the boxes at the top of the slide effectively show is that we've been able to invest over 3 times what was initially raised and put right back into the business, or an investment of greater than $70 million back into Buck Reef, effectively on a capital raise of about $19 million net. And this investment really has allowed us to grow production, cash flow, and EBITDA efficiently and cost effectively, all while maintaining low overhead costs, as highlighted in the chart at the bottom right hand of the page. Stephen touched on this when talking to the slide 2 slides ago. We did put out a Q2 results preview a couple of weeks ago, and we were pleased to highlight record quarterly production of about 7,400 ounces. And that was in line with guidance. We did put guidance of between 25 and 30,000 ounces of gold out this year. So 7,400 ounces was in line with guidance. And we coupled that with record gold prices of about $4,700 an ounce for the quarter. And while our full results are still set to be released in a few weeks' time, it is expected that revenue in Q2 is expected to have significantly increased relative to what we published in Q1. Secondly, and importantly, we were very pleased to highlight that all of the company's warrants that were put in place with the initial capital raise 5 years ago were exercised during the quarter. And that's led to a clean capital structure for TRX, as well as a cash position of about $25 million on our balance sheet. And consequently, the increase in cash, coupled with the increase in production and investment, has allowed us to improve things like working capital around things like accounts payable, where our working capital is now improved to a ratio of about 2.5 times. And that's a significant improvement relative to last year, as we worked through a stripping campaign in the early part of 2024 and 2025. And finally, Stephen kind of touched on this at the outset of the call, but we also announced in our last press release that we continue to progress our plant expansion in line with the PEA, coupled with an increase in exploration drilling, which is really starting to take root, which again, we hope will add to our resource base over time. So we'll update the market with a fulsome release in a few weeks, but we're very pleased to put these record results out in the interim, and look forward to putting the fulsome release out. So stay tuned.
Yeah, so Mike, what I would caution people here is it's great to haul in the warrants and clean up the capital structure on the share side. But the working capital ratio was really improving regardless of that. And so the major drivers of that are a significant decrease in payables, while continually investing in the business on the expansion side. And now that working capital has been, right-sized, there will be significantly more dollars going into the expansion. We'll probably move up expansion items, given where the current gold price is, as well as into the exploration side of things.
Yep, good point. Thanks, Stephen. This slide here summarizes some of the highlights of the fulsome Q1 release that we put out. We've got an August 31 year end, so Q1 was November 30 for us. But without going into all the details here, in short, it was a record quarter for us that has since been exceeded by the preview that we put out in Q2. A record gold production, record gold prices, and consequently record financial results with an improved balance sheet. While continuing to invest in the business, both on the stockpile side as well as the plant optimization. So again, you've seen an increase in Q2 relative to Q1. Our guidance suggested that Q1 would be, despite a record quarter for us, would be the weakest quarter of the year. So it continues to improve from here. The slide here shows a cross section of the pit in the main zone. And the reason we like to show this slide is really to highlight that the grades at Buck Reef, for the gold-bearing rock, continue to improve as the pit gets deeper. So you can see above the white line is basically where fiscal 2025 mining took place, and below the line is really what's been planned for this year. And you can see the brighter colors there. The higher grade continues into this year, hence the increase in production. With grades averaging well above 2 grams a ton this year. And you can see as we get deeper, you expect those bright colors and those higher grades to continue. So as we get deeper, the grades get better and production continues to improve, in short. The slide here summarizes some of the highlights of the PEA. I'd encourage listeners to go and look at the fulsome PEA when they get a chance. But namely, and we've touched on it a couple of times. The PEA contemplates over 60,000 ounces of production. That's at 3,000 tons a day. You've heard Stephen touch on the fact that we're looking at a much larger mill. So the expectation is that we increase that production and compress that life of mine. But importantly, the average annual free cash flow, in this case at about $2,000 gold, was over $60 million a year. And consequently, the plant expansion and underground expansion, or what's being characterized as growth capital of about $90 million over the first 4 years in the study, can be funded by using existing cash flow. So in looking at this slide here, it's a bit of an eye chart, so I apologize. But amongst other things, what this is meant to show is that the first 4 years of that growth capital, or about roughly $30 million related to the plant expansion, followed by about $60 million related to the underground development. You can see in some of the some of the gray bars, Buckreef generates more than sufficient EBITDA and operating cash flow to self-fund those CapEx requirements, as outlined in the study. There's CapEx coverage multiples of 3, 4, 5, 6, 7 times. And the average annual EBITDA over the first few years, you can see it, averages over $100 million and peaks at over $300 million at $4,000 to $5,000 gold. So, this next expansion, in short, continues to follow the model that we've been executing over the last few years of using self-funding growth, through cash flow from operations to grow the business. As mentioned at the outset, one of the big value levers that we see is unlocking the blue sky exploration potential that we see on the property. Again, it's a 16 square kilometer land package that's been relatively under-drilled, and we see lots of opportunity to drill it. The 1.6 million ounce resource is contained in the main zone, which is highlighted in the pink and yellow colors on the map. So again, it's a relatively small portion of the total land package. And since we joined, we identified a series of shear zones that splay off the main zone with both grade and mineralization that looks like the material that we're mining in the main zone. For example, Anfield Zone, which you can see on the chart here in white, sits about 500 meters parallel to the east of the main zone and has a series of shallow historical artisanal workings, which we've pulled grab samples of almost 30 grams a ton. So we're very excited to drill that out and see what it holds. We've also got historical resource at the Eastern Porphyry up to the top, as well as the Stamford Bridge Zone, which I'll touch on in a second, which again, the goal here is to drill these out this year and into next year with the goal of adding to our resource over time beyond the 1.6 million ounces currently reported. As part of that drill program, last year we did release the best drill hole results ever at Buckreef with highest grades that we've ever seen to date. This is the Stamford Bridge Zone, which I touched on. It's a splay off the main zone. It looks like it may form a bridge between the main zone and some of the satellite deposits to the east, which we see as highly prospective. We're planning to do some targeted drilling in this area over the course of this year, and dependent on free cash flow, hope to expand the drilling, given the prospectivity that we're seeing. We did do a geophysics study that identified a number of targets that we're going to spend some time and effort on this year. So this discovery here was not considered in the PEA. So our hope is that we can bring Stamford Bridge and some of these other drilling targets into the resource as we drill it out over the course of this year. So we're very, very excited about the prospectivity in this area, and we'll certainly update the market with assay results as and when they come in. This is a sort of evaluation chart against some of our peers, and Stephen and I don't like to say that we're undervalued, but rather like to say there's significant opportunity to move up the value chain as we execute. These charts are just showing 3 valuation metrics on your valuation football chart that we feel we can continue to move up as we execute against that PEA.
So, Mike, you want to go back to the prior slide, please?
Sure.
So what I would say is that this is relative value at a point in time. So in order to grow the value in the share price over time, look at the metrics that you're looking at. EBITDA is one metric. We're growing EBITDA as we continue to grow and expand. So EBITDA metric is going to expand significantly over time as we execute. Net asset value. As I mentioned earlier, on net asset value, you change the gold price assumption in your mine plan, more ounces are going to come in, your net asset value is going to expand, your net asset value is going to expand as gold price expands as well. As you bring in more resources on the exploration drill bit, you are also going to expand net asset value as that comes into mine plan. On the next metric is on ounces. Again, that's your exploration program, as well as in our mining asset, as we expand, as we change gold price a little bit, there probably is going to be more resources come in there as well. So all these metrics, we're growing up the metric chain, but we're also growing the underlying metrics for that particular valuation. So what we want to do is we want to, for instance, increase EBITDA and get a better multiple. That's where we're going. That's how you get share price appreciation while not issuing capital at the same time.
So as far as capital structure, as mentioned at the outset, we are dual listed. We're on the New York Stock Exchange American and TSX. We're trading, as of yesterday, just north of 500 million US market cap with about $25 million cash on hand. We're substantially debt free. We've got a small financing facility available in country with access to supplementary liquidity with a $25 million ATM, as well as a gold prepay facility if and when we need it. We're a widely held retail stock that's currently trading at about $1.60 US. We've got 4 covering research analysts with an average target price of $2.20. So the hope here is there's lots and lots of opportunity to grow from current share price levels as we continue to develop and then grow the asset.
Yeah, so Mike, I'm going to add in here around this. We track trading quite closely. And so we know where our shareholders are and who's trading the stock. And I would say it's a very tightly held retail stock as well. So there's not a lot of what I will say. We have a lot of good long-term shareholders who don't really trade the stock. So stock volatility is predominantly driven by what I'll call, algorithmic and algo trading alongside with the market. And so in that, we do follow short positions quite closely and how it does trade. For instance, if you look at the last downdraft of gold stocks here in the last couple of weeks, the metric that we've been tracking showed 2.5 weeks ago, 10 million shares available to be lent. If you look at that this morning, it's under 6 million shares to be lent. And that's only one metric that is out there. There's other metrics out there as well that can be tracked. So we do have a good understanding of how this is trading and why it's trading, and stay tuned for some corporate things on that side.
So Daniel, we got our last slide here, our investment proposition in closing. We'll leave a minute or two for questions. Again, we're operating a profitable, cash flowing and growing gold producer in a tier 1 jurisdiction at record gold price levels with record drill hole results and plenty of blue sky potential. We're an experienced management team that's done what we said we were going to do since we joined 4 years ago. We've shown year-over-year growth in all financial and operating metrics, having completed 3 expansions in 3 years, on time and on budget, with more to come. We plan on deploying capital into the drill bit this year with the goal of expanding the 1.6 million ounce resource, which we see as a big value lever. And finally, we got a $2.6 billion study in the market that demonstrates an asset that's ripe for growth with lots of upside potential, and we think is a compelling investment proposition. So with that, we'll leave 1 or 2 minutes for quick questions here, Daniel, if we could, please.
No, that was excellent. Thank you so much, both of you, for going through everything. A couple questions have come in, and I guess just if you could explain with the time that's left, where do you see as the biggest risk to completing the plant extension on the timeline as it is? And then I guess just kind of to sum everything up, you guys have a lot of, positives going on right now with the Q2 update and what you did in Q1. What do you think the biggest disconnect is right now with investors in the stock price versus where you see the valuation?
I'll start off with the first one, around capital. So look, I don't see a huge amount of risk in the expansion. We have a good idea where to go get our SAGD ball mills, flotation cells. That is well underway. We've been asking for quotes in the last couple of weeks around that. So we're pretty comfortable with that. We've been able to build and expand this. As Mike mentioned, this is a straightforward non-science project. And we got a good handle on mine plan and things of that nature. So I'm pretty comfortable with the timelines and the risk profile around that. There has been some backup at the Port of Dar es Salaam, but we've been able to manage that quite well because the port's quite busy. With regards to the biggest disconnect, I think, look, this is an industry of it's a show me industry. There's been a lot of burnt bridges in this particular industry, and the valuation will come as you put the results out. That's what we've experienced in the last year. Our stock price didn't turn around until working capital got fixed, for instance, because people always assume an overhang and a capital raise is coming. And so there's a disconnect there. You just have to execute and have faith as you start to execute that you get properly valued. If you create a significant amount of cash flow at the end of this, as you can see in our PEA and the stock price doesn't react, then maybe in a year or two there'll be a buyback program. If there's too much cash flow. So that would be a good sort of problem to have, but we'll evaluate where the valuation is at that particular point in time, vis-a-vis what we think the underlying value is to make those type of decisions. So you got to execute and you got to stay off the market. And you hear that from us the last 4 or 5 years is you got to be very capital disciplined and stay off the market and don't continually dilute in order to survive. And we've, created cash flow from the asset. It grows a little bit slower, but the underlying denominator in shares outstanding doesn't grow. Now, the warrants were exercised. We had no choice. We couldn't stop that. So that will be, there will be a little bit of a share count increase as a result of that, but that was due to what we had to do 5 years ago.
Perfect. Well, guys, we really appreciate it. For those of you in the audience, thank you for attending this first part of the conference. But again, Michael, Stephen, thank you so much for your time. Thank you for kind of outlaying the accomplishments that TRX has had in recent quarters, and looks like you guys have a really great path moving forward. So on behalf of Sidoti and those of us in the audience, thank you so much for being here.
Thank you.
Bye, everyone.